I turned a $50 account into $103 in one day. No, I'm not selling you a course. No, I'm not about to hit you with. Link in bio for my Lamborghini manifesting ritual. I'm reviewing a trading view indicator called Flux Algo from Flux Charts, and I'm giving it away for free. With Claude AI coding, I remade it to be open source so it can be used for free, as well as how to install it in your chart in under 2 minutes. But here's the part you need to hear. Day 5 is where most indicators get exposed. So before you scroll away thinking this is another Magic Arrows video, stick around because I'll show you exactly how it generates signals, why it doesn't need a big account, and the one setting that turns it from kinda decent into okay wait, what? So here's the deal. Today I'm reviewing Flux Algo from Flux Charts. I'm testing it on a $50 account for 7 days, and I'm giving you the exact setup I'm using for free. And listen, this is not financial advice. I'm not your broker. I'm not your therapist. I'm just the person who's willing to do the thing most trading gurus avoid like it's child support. I'm going to show you the logic, the rules, and the results without turning it into a mystical TED talk about market energy. But I'm also not going to lie to you. Day 1 was insane. And when something is insane, there are only 2 possibilities. Either it's genuinely decent, or it's about to humble you so hard on day 5 that you start Googling how to disappear and become a monk. So stay with me, because I'm going to break down what Flux Algo is actually doing under the hood in plain English, and I'll show you how I ran this test so you can decide if this is a real tool or just another flashy indicator that works perfectly until you touch it. Alright, quick structure so you know what's coming. First, I'll explain what Flux Algo is and what it's trying to solve. Second, we'll break down how it generates entries, like what actually causes a buy or sell signal. Third, we'll break down exits, because entries are cute, exits are everything. Then we'll go over the extra features. Filters, multi-time frame trend table, dashboards, trend lines, sessions, all that. Finally, I'll show you the day-by-day performance on the $50 account, and I'll tell you exactly how I would use this if I was starting from scratch with a small balance. Let's start with the ugly truth. Most small accounts don't die because the strategy is bad. They die because the account is small, the trader is impatient, and the market is not a charity. So when I say Flux Algo works well for any account size, I don't mean it magically prints money for everyone. I mean the logic scales. It doesn't require some giant position size to make the math work. It uses volatility-based targets and stops. So the structure makes sense whether you're trading micro positions or big size. Your position sizing is still your responsibility. Don't be the person who hears works on a $50 account and decides that means full margin, 50x leverage, and a prayer. Now, what is Flux Algo in one sentence? Flux Algo is basically a trend-following entry engine with built-in filters and a structured exit system using ATR-based take profits and stops, plus some quality-of-life tools like dashboards, candle coloring, and multi-time frame direction checks. And the core entry mechanic is actually simple. It uses a supertrend crossover. If you don't know supertrend, here's the simplest explanation that's still accurate. Supertrend is a line that flips above or below price based on volatility. Volatility measured by ATR, the average true range. When price crosses that line, supertrend flips, and it's often treated as a trend shift or momentum change. So Flux Algo's basic trigger is, if price crosses above the supertrend line and gives a green arrow, that's a buy signal. If price crosses below the supertrend line and a red arrow, that's a sell signal. That's the skeleton. But the problem with raw supertrend is that in sideways markets, it can flip back and forth like it's indecisive in the shampoo aisle. That's why Flux Algo adds filtering logic, because signals aren't valuable if they happen every 90 seconds, and half of them are basically random. I'm trying to see if this thing behaves like a strategy or like a slot machine. Okay, this is important. A lot of indicators give you arrows and then ghost you like a bad date. Flux Algo at least tries to answer, cool, you got in. Now what? Now let's talk about the filter system, because this is where you decide if the strategy trades like a calm adult or like a caffeinated raccoon. Flux Algo includes a sideways market filter that can be set in different modes. ATR only filtering, RSI only filtering, ATR OR RSI, ATR and RSI, no filtering, and also modes that only allow entries when the market is sideways under certain definitions. Here's why that's interesting. Most people think they want an indicator that trades all the time. You don't. You want an indicator that trades when there's an actual move and chills, when price is just doing that annoying sideways range where you get chopped to death in slow motion. So what does it use? It compares ATR to an ATR moving average. Think of it like, is volatility expanding or contracting relative to its norm? Then it uses RSI boundaries. RSI is basically a momentum oscillator, and here it's used as another condition to decide if the market has enough push or if it's stuck in the mud. And because it gives you different filter modes, you can tune it depending on the asset and time frame. If you're trading something that trends clean, you can loosen the filter. If you're trading something that loves chopping, like it wakes up every day and chooses violence, you tighten the filter. Now, exits. This is where the strategy either becomes respectable or becomes another entry-only ego booster. Flux Algo offers two take profit and stop loss styles. One is percentage-based, the other is ATR-based. I prefer ATR-based most of the time because it adapts to volatility. In quiet conditions, the targets are smaller. In wild conditions, they expand. That makes sense because expecting the same fixed target when volatility changes is how you end up taking profits too early in trends and too late in chop. That's huge for small accounts because it turns your exits from all-in, all-out drama into a structured plan. TP1 can pay you and reduce risk. TP2 and TP3 build the account. TP4 is the runner for big moves. And the stop loss is also based on ATR multipliers, placed on the opposite side of entry. That means the stop is not arbitrary. It's at least connected to volatility. Now, I need to say something that people hate hearing. A structured exit system will still lose sometimes. If you expect any indicator to have 100% accurate signals, you're not looking for a strategy. You're looking for a bedtime story. Markets fake out. Indicators react. That's life. What matters is whether the system can control loss size, let winners breathe, and avoid overtrading. Now, Flux Algo isn't just super trend plus ATR targets. It also includes a bunch of extra components, and you can ignore most of them if you want, but they're useful for context. There's candle coloring logic using MACD histogram behavior. In plain English, it colors candles based on momentum strength. That helps you visually read whether momentum is building or fading without having to stare at yet another panel indicator. It also includes a trend catcher style EMA crossover logic in one section. And there's a big cloud and ribbon system where you can plot different moving averages in a cloud formation. It supports a ridiculous number of MA types: EMA, SMA, WMA, VWMA, RMA, Hull, McGinley, Frama, Jury. Basically every moving average known to man and at least 3 invented by someone who definitely drinks espresso at midnight. Do you need all of that? No. But here's why it matters. This is one of those scripts that tries to be an entire toolkit, not just a single trick. The risk with toolkits is confusion. The benefit is flexibility. Now the multi-time frame table. This is one of my favorite parts for real trading. It calculates trend direction across multiple time frames and shows green or red. This is not a magic predictor. It's a context tool. If your 1 minute is screaming BUA, but the 4-hour and daily are red, you're probably trying to swim upstream in a hurricane. Can you still profit? Sure. But your odds are different, and your position sizing should reflect that. There are also session overlays. New York, London, Tokyo, Sydney, with ranges and optional VWAP/mean lines. That's useful because different sessions behave differently. Some assets trend clean during certain sessions and chop during others. If you ignore sessions completely, you'll eventually ask, why does my strategy work sometimes and then randomly become trash? And the answer is often. Volatility regime changes with session behavior. There's also trendline logic and broken trendline detection. It draws trend lines based on pivots, extends them, and marks when price breaks them. That's useful if you want confluence. Supertrend flips and a trendline breaks. That's a stronger narrative than arrow showed up. It also plots supply and demand zones using pivot highs and lows with an ATR-based width. Again, you don't need it, but it gives you a framework. If Flux Algo gives a buy, but you're slamming into a supply zone overhead, maybe you don't go full size. Maybe you treat it as a scalp. Maybe you wait for confirmation. You act like a professional, not like someone trying to speedrun blowing an account. Now, let's get to the part you actually care about, the test results. Before we go deeper, here are my test rules, because if you don't have rules, you don't have a test. You have gambling with extra steps. Starting balance, $50. Duration, 7 days. No adding money. No martingale. No I'll just double it back. No revenge trades. Same indicator, same settings, same approach. I'm not trying to win a highlight reel. Day 1, I started with $50 and took a tight entry on gold. End of day, I got plus $103. That brought the balance to around $153. I'm going to be honest, when I saw that, my first thought wasn't, I'm a genius. My first thought was, okay, where's the catch? Because big day one gains can come from a few things. A perfect trending day, aggressive leverage, or a strategy that will eventually give it all back if you keep pushing. So I didn't change anything. No victory lap, no let's double risk because we're hot. Same structure, same rules. Day 2, I took sells on AUD. Made plus $3. Balance, $156. That day was basically the reality check day. Not every day is fireworks. And if your strategy only feels worth it when it's throwing $150 days at you, you're not looking for a strategy. You're looking for dopamine. Day 3, plus $7. Balance, $163. I went ahead and took it on my personal account, live, to see if it did well there as well. So far, I am above $1,000 in profit. 2K, alright. If we reach the third TP, I will close the trade. Come on, man. Just hit the TP. Okay, for day 4, I made plus $6 for our mini challenge account. Balance, $161. So in 4 days, $50 account went to $161. That's the truth of the test so far. Now, day 5, I hit a home run with our last trade, hitting 3 TPs on a sell for GBP, but I got a few losses from earlier as I was too late to close a sell trade, and over here when I took the next buy signal, but it came too short. We ended the day with $31 profit. In day 6, we hit a 3-to-1 RR target of $53 in profit. Day 7, we took a long with our dear Australian friend with all TPs hit. Now let me explain how I would actually use Flux Algo in a way that's simple enough for beginners but not stupid. Step 1. Pick your time frame and stop hopping around like a cracked out squirrel. If you're day trading, you might focus on 5M to 15M. If you're swing trading, you might use 1H to 4H. The indicator includes multi-time frame context. Use it, don't ignore it. Step 2. I said this before, and I will say it again. Take a buy when you get a green arrow and the chart is over the super trend, which will turn green. For a sell, it is the opposite when you get a red arrow and it is below the super trend. That's it. That's how you take trades with it. And you turn off auto trend lines because you don't need, and it just clutters your charts. Flux Algo is powerful on its own, but if you stop here, you're only using half the weapon. The traders who are actually printing on this thing aren't using Flux by itself. They're stacking it with my SMC scalping strategy, and that's when the setups become almost unfair. The confluences, the precision, the way it catches the real smart money moves, it's on another level. I dropped that full SMC scalping video a while back. Most people watching this right now will never go watch it, and they'll keep getting the same average results they've always gotten. Don't be most people. The link is right here on screen. Go watch it immediately. This combination might be the edge you've been looking for. Bonus tip, pick a filter mode and stick with it for the whole test. If you keep changing filter modes every time you lose, you're not optimizing, you're coping. If the market is choppy, use stricter filtering. If the market is trending, you can loosen filtering a bit, but don't turn filtering off and then act surprised when the strategy takes 18 trades in a range and your account looks like it got hit by a truck. Step 3. Respect the stop loss logic. This script uses volatility-based stops for a reason. If you keep moving the stop because it'll come back, you're not trading a system, you're praying. And prayer is not a risk management strategy. Now, let's talk about the biggest mistakes people will make with Flux Algo. Mistake number 1, treating it like an ATM. If you think signal equals sign guaranteed, you're going to over-leverage and die. That's not an insult, that's just math. Mistake number 2, changing sensitivity every time you lose. There are sensitivity settings for super trend-like logic. Too sensitive and you get spam signals. Not sensitive enough and you enter late. The goal is not perfection. The goal is a consistent edge with manageable drawdowns. Mistake number 3, ignoring market regime. Trending strategies suffer in ranges. Range strategies suffer in trends. Flux Algo tries to adapt with filters, but you still need to pay attention. If volatility collapses and the market goes sideways, you either tighten filtering or you step back. You don't scream at your chart and force trades like the market owes you money. Mistake number 4. Forcing it on the wrong asset/time frame combo. Some assets trend beautifully, some are chaos. Some time frames are clean, some are noise. If you want this to work well, you test it on the specific thing you trade, not on some cherry-picked chart someone posted on Twitter at 2 AM. Now, about the free part. I'm giving away the version I'm using for free, meaning you'll be able to copy it, load it into TradingView, and use the settings I used in this review as a baseline. No paid group, no VIP signals, no DM me and I'll ignore you for 3 days, then send a PayPal invoice. I hate that stuff. So if you made it this far, make sure you like and subscribe. It's also free, and you can change your mind. And I don't want to be that guy, but most of you watching this haven't subscribed, so please join the community, because we have a milestone to reach this year. Now let me show you how to put this in your chart. First, download the script. The link will be provided in the description below. Open the text file, copy the whole code, open TradingView, go to Pine over here, got to create new and choose indicator, pass the code and click add to chart. Congratulations, you're a coder. Now lastly, just save it like this and you got it. So here's my honest verdict so far. Flux Algo is not magic, but it is one of the more complete toolkits I've seen in a single TradingView script. Entries, filters, exits, multi-time frame context, and extra confluence tools like trend lines, sessions, and zones. The real value is not the arrows. The value is that it forces structure, where you entered, where you're wrong, where you take profit, and how you manage a trade instead of just vibing. If you're a beginner, the best use is to stop cluttering your chart with 12 indicators that contradict each other and use Flux Algo as your main framework. Then refine with basic context, key levels, sessions, and not trading directly into obvious zones. If you're more advanced, you can use it as a signal engine and add your own confirmation rules, like only taking longs when higher timeframes agree, or only taking trades during specific sessions when volatility is reliable. And finally, the reason this can work on a $50 account isn't because it's easy money. It's because the strategy structure doesn't require massive capital to function. What kills small accounts is sloppy risk and emotional decision-making. A structured system gives you a fighting chance, if you don't sabotage it. So, that's the breakdown. Day 1 through day 7, we went from $50 to $253. That's what people relate to. Nobody learns from a fake perfect equity curve. They learn from, here's what went wrong, here's what I changed, here's what stayed the same. And you can run the same 7-day test yourself. And please, don't be the person who turns one crazy green day into a personality trait. And I make more bangers like this all the time, such as this videos you see on your screen. Oh, did you know I did Gaines Algo as well? You should check how that guy did. See you all in the next candle.